All right, we are live. Let me get this tweeted out here. All right. Awesome. Hope everybody had a good day today. Happy Martin Luther King Jr. Day. Hopefully, good day to reflect on, the peace that we have, and the work that Martin Luther King Jr. did. So it's a important day for America. Futures looks like they're back open here, so we're it looks like we're a little bit down on those. Kind of jumping around. Look at that, just went from 60 to 48 to 53. So going a little bit wild here. A little bit down. There's a full moon over yesterday / today. So who knows if that is an omen on the market or not? But either way, we've had a huge run up. Let me pull up the SPX. We've had a really major run up here. Let me go to the bar chart. Okay, I mean, if you look at the daily on the SPX, right? Clayton mentioned this to me earlier, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 green days in a row, right? pretty colossal, really, if you think about it. But again, this is kind of followed by this mega move up. How many red days do we have in a row? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? So, it's sort of that action-reaction type thing. So at this point, maybe, well, I don't know, maybe we'll start getting into some normal trading, but but it's nothing's really been really normal recently. So I think we're one thing Jeff Cooper said, in his Twitter feed that 2019 is going to be, pretty crazy ride. So we just have to be geared for it and be able to adapt to it. And that's one of the reasons that I'm switching the $50,000 challenge instead of doing the straight swing trades like I was originally doing on like Starbucks, McDonald's, Nike, those type of trades. They just weren't acting right. I mean, right? I mean, there was so much chop, in between. I mean, they started to move, and we're just setting up new wave structures that made it really difficult. And part of the time I was like, okay, let's switch to vertical spreads, and that's one of the things I want to talk about tonight. We're not going to do that for the $50,000 challenge because I want anybody who's following and learning to show that hey, we can at the very least scalp options and possibly swing some for good profits like we did on Nvidia last week. But hopefully, by the end of the challenge, everybody will become more of a sophisticated option trader, and we'll be able to understand, some of the more exotic option trading styles. So you'll be able to do that in your account. So hey, with $50,000, and banking a lot of profits and all that stuff, but you'll be able to trade those, in your accounts like a little bit better. So today I do want to talk about vertical spreads. So we'll get to that in a little bit. Because they are great for swinging and probably the best way to swing options. If you have a good setup or something that you like, a good wave structure, a good technical setup, it's a great way to hit your price target within a time frame and not have to worry about the theta decay so much as you would with just a single option, right? And that's really what kind of got us, or got me on like the McDonald's trade and Starbucks. It's like these things are moving, and we got some good moves on it, but we didn't get quite the dramatic move in the option prices we would have liked to have seen. Starbucks went $2, and the option price stayed flat, right? So it's like you have to deal with theta, you have to deal with vega, you've got to deal with that choppiness that that affects your premium, right? And then the up and down of the implied volatility, it really can affect that. So it's okay. We're just adapting. We just have to trade a little bit quicker. Of course we'll adhere to the pattern day trade rules, right? I mean, if we don't have a trade, we'll wait till one's freed up and we'll take it. So that's why we have to find the best setups and maximize those, right? So that's fine. But basically, yeah. So let me just give a quick market review here to see where we're at since a while ago, since last week. With the long weekend. For the most part, right? As we've been reviewing, we have the all of 2018 was pretty much here within this channel, marked by these yellow dashes or these orange like dashes, right? And so let me see if I can pull that down a little bit more for you. No, it's kind of stuck. Let me take off the level 2. That should help a little bit. Okay, so you can kind of see this, right? And so what we were originally seeing, right, is in this corrective wave, is a 1 ABC 2 and then possibly a 3, and we were expecting a 4, right? And I even got corrected. Sometimes it's hard to catch. I correct folks, and it's good that we keep each other in check. But the wave 4 cannot cross over wave 1, right? And so once it does, it's not a wave 4. So we have to figure out this is some sort of different type of wave structure, right? So at this point, it's really quite a run. Almost a parabolic run straight up. And so you would expect some sort of correction soon. And interestingly enough, we are approaching this. This here, if you go to this tail right here, this is the big pitchfork, through 2018. That kind of led us here. It kind of gave us a bit of a bottom. It showed us kind of where it was hitting bottom on the daily, and then it gave us some nice pivot kind of point of resistance here here at the median line. So that was the support. We had some resistance. Then it broke through it, right? And then basically, if you extend this channel to the right, you can see that sort of here, this day here, served briefly as resistance. Now we're back through that, right? So we're back in the channel, right? And so at this point, now we're looking at this pitchfork here, right? So, and it's pretty good, right? Because remember, this whole area where we broke down, right? We had 1, 2, 3, almost 4. This is kind of your big breakdown kind of area right here. Retested again just to take out any weak hands basically, and then pushed right through it, right? And so now this kind of didn't even really test it. So you'd think at least as it gets this sort of pitchfork resistance area, that would at least come back and retest this channel, which is going to be around that 2640 kind of area before deciding whether or not it wants to hold and get back into this pitchfork here and get back into the full channel range. Or if it's ready to reverse and come back down and at least test the median line and then see how it handles that, maybe lower. So in terms of wave count, right? So we've got 1 ABC 2, right? If this were a 3, maybe, possibly, right? Or it was just a part 1, right? Wave 1 of 3, right? And this is wave 2, right? And so that's why I have the Fibonacci retracement up here, because when we did our Elliott wave session on Fibonacci's, right, we know that wave 2 typically retraces around 61.8%. It could go 71.6%, or it could go 100%, right, of the of this retracement of this wave, this first wave, right? So this is basically what we're saying is that this is wave 1, smaller wave 1, right, sub wave 1, right? And so now we're trying to say, like, okay, well, where's wave 2? Maybe it's going to be here, right? Maybe we're going to pivot tomorrow and give us another push down. So it's actually quite frightening, right, for the market if you look at it in this perspective, right? Because we have 1 down, ABC 2, right, and then 1, nice wave 1 down, like 1, 2, 3, 4, 5, right, and then this was 2, right, and then after that, right, we would see an impulsive wave 3 down, right, which could be pretty frightening. Here's the only thing that concerns me about that is that typically wave 2 is not as sharp as this is, right? So and wouldn't be just this could be like a small ABC or something like that. So my guess is that it wouldn't be quite this dramatic. So let me remove this right here, and then I'm going to put a small wave A. So we could be done with wave A here, right? And then we don't know yet, right? This market could do anything, right? But hear me out on this. Maybe we come back down, see, here, and it's an expanded flat. But goodness, sorry guys, B. And I'm doing this earlier, right? So I'm like super tired. So A, B, and then we get back here to C. Right? So this is all very possible, right? So so we could see this, right? It could be like, oh no, the bears are like, we're going to new lows, and then this comes back. See, this is the expanded flat is usually the bull and bear trap, right? And so at this level, right, we know there's a pitchfork here, so we could expect to see some resistance. So we could see A, B, C, right? So here everybody's thinking, we're getting below this. Everybody gets really short, and then bounces back up, and then that would be our wave 2. So let's keep this on as our theory for now before we explore other theories. So we'll see what the price action is tomorrow. If we get a nice pivot here, right, we could see some downside movement here and then back up to C. C doesn't have to go all the way high. It could end up at this pitchfork here, and then we could see lower down, right? And that would be our wave 2. And that would make sense, right? Because it would kind of end right at that 61.8 retracement, right? Then that would be a complete wave 2 of 3. And then from there, you would expect it to really tank, right? So I don't know. As you guys know, I'm probably overall prefer to be bearish because shorting is so much more fun. But really, this last long went up as fast as almost a short, right? So it was a very steep, rise to the upside. I had trouble capturing any big moves off of that. I caught a few, but really didn't think it was going to be that big, right? I really had a bearish sentiment on it. And that's one of the keys, is being able to switch, sentiment when price kind of indicates it. Excuse me, and it's easier said than done, right? So, we had some, a couple indicators that we could have seen is, a little bit better is, hey, we were bouncing off of the pitchfork bottom. We had RSI divergence, right? We had a MACD crossover a little bit later, right? And then if you go and explore your charts a little bit further, the monthly you don't really need at this level. But if you look at your candlesticks, I'm going to show you a couple things. And we saw a few other things too that were really interesting, right? Remember on the daily, we saw some Morningstar reversals. So that was one indicator too. But a big indicator on the weekly is your 200-day move, or your 200 simple moving average, right? Your 200-week moving average, right? And just as your 50 is too. So I'm going to actually increase. I'm going to edit the properties of this. Wait, no. That was a channel I drew, sorry. But anyway, look at that. Perfect balance of your weekly 200 moving average. And that kind of was the impetus for it getting back up, right? And so we also closed on the weekly below the lower, this big orange bar right here. This big orange line is your Bollinger Band, right? So we closed really deeply below that, right? And anytime that happens, you can almost expect, some sort of reversal at some point, right? So because, just general market correction, right? Also a wave correction too. But the market wanted to test that 200 moving average, and it did. It came up, and it was, all she wrote back up to the cloud. If we go back to the daily, right, we had a Morningstar Reversal, right? And so the Morningstar Reversal is you have a red bar, right? You gap down, and the real body of this bar closes below the real body of the prior bar, right? And then the next day closes deep within the range of this first bar, this one here, and it did, right? So this right here, and I tweeted it out several times on many different stocks, especially the FANG stocks, that we had a Morningstar Reversal here, right? And you could see that after that, right? So let's see, even if you entered, somewhere over here, let's say 2470, right? I mean, that was good all the way up to 2670. That was a 200-point move off of that reversal, right? And if you just kind of moved it for a couple days, it was 2470 all the way to 2520. So a 50-point move right there, right? The inside day, outside day, gap, went down. Everybody thinks this is going to be, super bearish after the New Year's, but didn't happen. Remember this huge spike after that, and then back up to where we are now. So we are running into some resistance, some cloud top type stuff, upper Bollinger Band on the daily. So we'll see what that does, if we pivot or not. And if we do, like I said, we might be looking at an ABC structure to where we're going. So anyway, so I just kind of want to touch on that. So real quick, let me get to some vertical ideas, right? So let me pull up my game plan, or the game plan for tomorrow, and just pull up a couple ideas that I've put out there. So one is Baidu. Baidu's looking really good, both on the weekly, right, and the daily. I know that you can't see anything here, but let me zoom in and just kind of show you what we're looking at. So real kind of big deal is this, the RSI, right? We've talked about RSI before too, right? So this is overbought. You can see where it turns blue here. It went below the 30 line. It's a little hard to see, right, because I've got the chart really blown up pretty big. Let me pull it up there. So you can see here on the RSI, right? This is the first time that that Baidu got into oversold and correct and moved in reverse. It's not like it's still going down, right? It is definitely pivoting here, right, through that oversold level. It's the first time that Baidu has done that since since back in 2015. And then look what happened, right? It was right at the lower Bollinger Band, right? And then reversed, right? You had a golden cross here on the 5 and 10 weekly moving averages, and then it gapped and just kept on going. Right, so right around this time, which is basically we're kind of like right here, it's a couple weeks after it on our end in the future, right? We had an inside week, and then went all the way up here about 150, 70 points, right? Which is a pretty big move in only a few weeks. And so how many weeks was that actually? Let's use that. 1, 2, 3, 4, 5, 6, 7. So 7 weeks, so 2 months, right? Went up almost 100 points or 70 points. So now we're basically in that same situation, right? We went oversold. We're 3 into it, right? So maybe, maybe we'll, and we're right at this this pitchfork level too. Let me go. I'll show you later in a second. So here we are, oversold. We've pivoted, right? You can see, we're working on a really kind of, pretty much a reversal here off of the lower Bollinger Band, right? So next possible target is the upper Bollinger Band, which is 189 from where are we now? 170. So that's 20-point move potential. Your 200 weekly moving average is right here at 198, right? So you'd think, over at least, the amount of time since it last tested it, which is back in October, which it makes sense, right? It's about 2 months, that it would move, potentially that amount. And so, so that's why I tweeted the other day that, looking at June, right, that gives you 6 months to get, pretty significant. But even in 2.5 months, we could see ourselves back up over 200, right? Would you agree, just based on that, just on using the RSI and using off of the Bollinger Bands, right? And so, bigger picture, let's just take a look at the, here, what else we're looking at, is that off of the high of 284, right, we had a 1, ABC 2, right? And this looked like a finished an impulsive wave 3, 4, and then possibly 5 here, right at the bottom of this pitchfork, right? This is a pretty big long-term pitchfork too, right? It came all the way back to a major pivot back there, right? And so, yeah, this is where I messed up. I said this is like a larger wave 4. I had here, ABC. This was your 2. And this is basically working on a 1, 2, possibly to shoot back up. So this pivot right here through the pitchfork, could potentially get us, let's say, in 2 months, 2.5 months, all the way back up to the pitchfork level, right? And so, did I say 2.5 months? Yeah. Oh, that was I'm sorry, this is 2017, so that's a year. But at least by the end of the year, right, over 270. So that's what I was saying, like June, we might get over, we should definitely be able to get over, this 200 level. So, so let's take a look. So if we believe that, if we really think that's the case, and it could do that, and a lot of the indicators are saying it is, how do we do that? How do we trade that? Well, one thing you could do is you could buy, out of the money calls on, so let's say June. Let's say June over 200, right? So let's do that. Let's take a look. All right, so if we go to June and we look at the 200 calls, right? And we look at 200, right? They're priced at $6, right? So that's kind of pricey, right? Just do that. And then if it does even get to 200, let's look at where we're at in the money right now. This is a good way to quick analyze it. So in the money, we're at 171, say 170, they're $3. So basically, if we're right, if we're completely right on just a straight single option to get to 200 to be in the money, we're going to lose $3. And that's to be right. To lose money and be right, that's not right, right? Nobody wants to be in that situation. That's why swinging options is really hard, just by holding the singles, right? And that's why using techniques to scalp them on like big breakout moves is why you can get so much boom vega into it really quickly, that you can get those big spikes on it and not have to fight theta, right? Not to have to fight time decay. You see what I'm saying? And so so now what we can do is look at doing a vertical to avoid that problem. And why does this work? And so let me show you real quick. So let's say I think it's going to be over 200 in June, right? Well, let me show you what you do. So in Thinkorswim, you can right-click there on the buy, and then you might not be able to see it, but you click buy, and you can buy a vertical, right? And so so this is just an example right here. So you buy one, right, 195 call, and you sell one. So you have to have the ability to sell naked options, right, with your broker, and unless you have that approval level, right, you can't do it, which really stinks because vertical is really a very safe way to trade options, but you have to account for the fact that if you're not a sophisticated investor, that you might actually sell your call and then have a naked call, selling one, and you could lose. I mean, you could really get hurt with that, right? You could lose everything. So just with that, but you're protected by having this call here, right? Right? You can't be hurt because of that. So so that's the trick, right? Is don't. So if you're going to sell a leg of this, sell the buy back the call, the one that you sold, and then you can let this one run if you really want to, right? If it's really moving that day, you just get rid of this one and then try to maximize your day with that, if that makes sense. Okay, so when we do this, right, we show here that the price is about. They're saying like the mid price here is 133. If you did the calculation on it, right, you would sell. It's your worst case scenario. It's 735, right? Minus what is it? 540, right? And so that's $1.95. So it's about $2, right? So that's your worst case scenario. If you market it in this spread, it cost you it costs you $2. But the midpoint area is about $1.33. It's where Thinkorswim basically thinks you can get filled at. So it costs you $1.33, right? And so so how do you realize your potential, right? So so this is the max that you could lose is $1.33. So if you bought one call spread here with a 195-200, right? The most you could possibly lose is $1.33. So if you bought one, the most you could lose is $133 minus your less any commission that you pay, right? So so how does that work? So how do you win with that, right? So you win is if your analysis was correct. If you got over $200, right? So if you got over $200, how much money would you make? Okay, so you would make the difference between the two strike prices, right? Plus and then minus whatever you paid for it. Sorry, minus whatever you paid for it. So you would make $5, right? Minus $1.33, whatever you paid for it. Okay. And so your max, the max you could possibly get, in this case, would be $367. That's about double, right? It's a little more than double. Actually, it's more than, right. It's more like it's between two. It's about 2.5. You'd make 2.5 times your money, right? Well, that's sure better than losing half of it, right? And being right. Remember, if you were right here and you just bought the calls, you lost half your money and you were right. In this case, you more than doubled your money by being right. You see? And you also limited your downside, right? Your max downside, if you bought, let's say the thing completely reversed and you forgot about it, you would lose your $6, right? Total, you'd lose $600, right? In this case, the most you could lose if you don't if you don't close your position or part of your position is $1.33. So hopefully you can see that. That makes it much more powerful. And what are you doing? So if you want to build a call spread, right, you could do, you could buy the 175 and sell the 200, right? So you'd make a vertical there, right? Now it's going to cost more. It's going to cost $9.18, right, or $918. But in this case, if you were right, it would be the difference between these two calls. It would be the difference between 200 and 175. So that's 25, so $2,500 minus 1,000, right? Essentially 1,000, right? So you're talking about $1,500 win right there, just on that. It's a little more than a double as well. Well, I'm sorry, it's not quite a double because you're giving yourself more range, but it's a 50% win on that. So on a $900 investment. So how it works basically is if you close below your level, if it closes below 195, you lose your full premium, right? Not in this particular case, but if you got these two, the 195 200, you lose your full premium. If you close in between, it's the difference between whatever it is, right? So if it was ended up being 198, then it'd be $3 minus this. So you'd make $100, right? And that's pretty much it. So I want to show you a tool that's in Thinkorswim. It's the Analyze tool, which is really great. So if you go to the Analyze tool, this kind of explains the whole thing. And I had this on Roku, so let me do Baidu. Let me delete this here. I'm going to go back to the chart here. I'm going to go with trade. And we'll do the 195 200s. Right? Obviously, the further you go out, the bigger your win could be. Right? But anyway, so you do a vertical. And you right-click on there where it says vertical. Or you could build it in the Analyzer, but you can click Analyze. And it pulls your vertical up here in the Analyze tab. Okay? So what I want to show you is, right, where was our level that we had to get, right? Well, this says the 210, so let me fix that to 200. and 195. I don't know why it didn't do that. Okay, so here, right, what was the level we had to get to make money, to double? Right here, 200, right? If we get over 200, we're good. We make, and it shows you right here what the most you could make and the most you could lose. Okay, so here, this is showing a different amount, where it was $1.33 before, so I'll put $1.33 in there. Okay, so right, the most you could lose is 133 bucks. The most you could gain, and you can see it's by this graph. Boom. If you're somewhere in between, right, it's the difference between the two. You can make $100 or something like that, right? So even if it's over 195, you'll still make money. Okay. But if you get over your target, right? So if your analysis was correct and you get over 200, you're going to make $367 off of a $133 investment. That's pretty good considering, right? That's the way to swing options. And that's kind of what I wanted to get at, and what I was trying to talk about when I was really saying I'm done, with doing the singles on this challenge, right? I'm doing verticals because I feel like my targets are right, but I'm getting messed up by holding on to these singles because the theta's getting me, the chop is getting me, and the vega, right? And so it's really just crushing my premium. And if you just do the vertical, you're guaranteed. Right, if you're over it, you're virtually guaranteed to get that amount. Right. The only other caveat is that if they can exercise your, that's why you've got to have, margin, right, to be able to do these. And that's why I was like, oh yeah, you can do it in a cash account, blah blah blah. But you can't. You got to have margin because they could exercise your naked call or your naked put if you're doing it a put spread. If you're betting it on it going down. Then they could assign that to you, and you're safe because you have the call, but you would just have to exercise your call option and get out of it, right? So that's the only thing that can happen in the meantime. It's very rare. It's never happened to me with TD Ameritrade with Thinkorswim. It's possible that it could happen, but if it does, just call up the broker and be like, hey, you guys just assigned me like these these shares, and I need you to go ahead and exercise my calls. Right, so you can break even. So you'd still make money, right? So if you were up here in this range and somebody, put it back to you, right, and you'd still make the money after you closed out your calls. So you'd still make that profit, right? It's just a little bit of a panic moment or something you have to be aware of, right? When you look at your account, you're like, oh my goodness, I have 1,000 shares of Baidu, right? Where you can just call your broker and exercise your calls. Okay, so that means, and that's all they did to you, right? Somebody exercised their calls, that you sold. You sold them. You sold somebody your calls, and they exercised them on you, right? So that's why you got them back. It's rare. It doesn't really happen, with option trading because it's so liquid these days. But somebody could do it. They could be like, oh no, I want to exercise, and you're the next one in the list, and they put it right to you. So you just got to be able to get out. But that's basically the idea. So this is a great tool in Thinkorswim that you can use to analyze the trade that you're looking at, right? And so even here, if I drop to like 180 or something like that, okay, well, I've got a bigger profit window where I can make money, right? But I've also got a little, if it gets below 180, I lose this here, right? So some people do bigger amounts, but your max gain, could be affected. So, and it also costs more, right? So this right now is showing $1.33, but that's not the case. It's it's fixed based on what I had in there. So, so your gain here, but it'd probably cost you about $1,000. So it's probably, let's just say it's $10, something like that. You'd have to go back and see what the market is. This one doesn't, for some reason, doesn't show you what the actual market is here. So yes, you could lose $1,000, but you can make, 1,000. This is just a very hypothetical situation. I was just messing with that. So anyway, so that's the idea. I wanted to go over that to show that's the best way to swing options. There's other methods too that you can swing as well. You could do condors, butterflies, and all that stuff. And maybe we'll do more lessons on that down the line. But this is the most straightforward and sensible way to do it if you're targeting a price, right? And that's why on Baidu, I'm targeting. I mean, look at this. It's right here. $200 is right here. Do you think that by June that that Baidu could get over $200 based on the setup that we saw? I do. I think so. And it's possible by March. Let's just take a look. By March, I mean, it should be able to get over 185, right? So let's see let's just see what it looks like here real quick. So $1.68, right? To make that difference to double up right there in March. So it's a great way to swing. So another one I want to show you real quick that's going to be on the list is IQ. IQ's got earnings. This is a lotto play, right, that I'm going to put out on the game plan today, and I tweeted it over the weekend. So IQ, nice breakout over this long trend line, right? Nice pullback, 1, 2 possibly, working on a 3 up, and that 3 could be confirmed by earnings at the end of the month. So in this case, I'm thinking it gets over 20 bucks, right? And this lotto is actually excellent. So February 1st, right? So you wait till earnings, and you assume that after earnings it's going to be over 20 bucks, and you buy these, this out of the money calls are 10 cents right now, right? For the chance to make, in this case 400. So I'm going to do 10 of those. Basically cost you $100 to make $400. So not a bad lotto, at all. So if you can get higher, I mean, it could get higher, right? So it is possible. So especially after earnings. So that's a good volumetric level there, that $20. So I think it's worth a shot. Could it get over 21? Could it get over 21? Let's see what that would be. That would pay. So if you're at the 20.5s and 21s, I think that was the one I looked at earlier. 50 to 450 right there. So 9 times earnings. If you think you can get over $21 after earnings, and it is possible, right? Especially if they nail it. So that's another possibility too. So so gauge your risks and know what you're looking at. But it's a great way to swing if you think that something's going a certain way in time, because this way you don't lose that theta decay on it, right? The theta is not going to affect you on these, right? Because you're only dealing with price, right? The difference is a price, so the theta goes away, right? And you can hold it through or wait till they expire, and the money will magically appear in your account, right? Because you're just getting the differences between those. So, but if you're profitable before then, go ahead and close it, right? Don't mark it out, right? Make sure you do stuff that's liquid, because you don't want to get, you can trade verticals on the market, and you just got to be real careful, right? Because the differences can mean a lot, between your spreads. So make sure you can get out. But if you're well in the money and you're profitable and all that stuff, you should be able to bank early. So anyway, so that's it. So enjoyed it at 7 o'clock today. At this point, if anybody has any questions or chart requests, real quick before I go through the chat box, what I want to do, I had a couple of requests through direct message. I got one for Mogu, MOGU. This looks like a recent IPO that I may have tried to trade. I can't remember, guys. Back in, I don't think I did. Back in December. No, I don't recall trading this. But yeah, nice one here. So this is Mogu. Gave you a peak here, open basically low. Originally, where did it open at? It opened at 12 bucks, failed, right? Reverse. So this is key, right? Whenever you're trading an IPO, always remember these levels, right? Because TME just did it too, right? TME with that huge breakout, and I had it on the game plan, so it was on the radar, right? These levels were key, right? This level here where it opened originally, that 1410, right? Powered through that on Friday, right? So these are some really key levels that were coming up, and it was really a good one ABC down, and I really think this TME is going to really break out pretty soon. It's looking super strong. MACD is, everything is just coming in strong. Volume's starting to come in. I think it was profile. I think something in the Wall Street Journal the other day. So just keep an eye on that one too. But yeah, this Mogu is very interesting. I'd like to analyze these numbers a little bit better, but it is you can see this volume here. This volumetric, it's got some volumetric resistance. Support here, and it bounced off of it. So it looks like it could push and get up to this 17 level. And you got to see how that holds. If we can get through this chunk right here of price and volume, then I think it could push up a little bit higher. But see how key this level was? See where this resistance is? That's right at the high of that first day. The high of the first day is 14.19, right? And the low, where's the low here? 13.92. Just went right below it, tested it, and came back up, right? The low here, 14.01. So this level was key, right? This was former resistance that is now support, right? So it's looking really good. And let's just see how it looks on the on the hour. Basically at this point, this could have been a 1. I'm going to treat it like TME at this point. Maybe like a 1. and then this could have been A. I don't know. It could be A, B, C, 2. Right? That could have been a zigzag, 335 flat, sharp final flat, zigzag down. And then now it could be working its way up. So 1, maybe look for a pullback, maybe 1 up here, pull back 2, and then launch, right? So something to definitely keep an eye on. But this 14 level is a really good place. If you're long in it, you can, if you're just scaling into it, your first stop here could be that low there, that 1392. Just make it like 1384, right? Just to stay there, stay safe, and then to see how far it goes, right? And this is something, I don't know if there's options on it. Nope, no options. So you can do a vertical on it, see if it gets over that 17 in like a month, and see how that pays, right? I mean, TME I think has got options now. Yeah. So if you think here with TME that you can get over, if you get over 14, you probably get over 15, right? So let's say it can do it by the end of February. Let's see how much that would pay on the vertical. Okay, so about 50 cents on the market. And so it'd be a 1-to-1 risk reward right there on that. So not really good, right? But if you can get over 20, right? If you can get over 20, I think this one actually pays you. Like, I think you get a credit to buy. Yeah, you get a credit to buy it because right now there's no price on it, right? There's there's no bid. But basically it's like they pay you to get it, but you can't get those filled because there's just no volume on it. But yeah, let's see what over 18 does. Let's try these here. If you can get over 18, yeah, that's pretty good there. It's like $15 to get in and $85 to get out. So that's if you can get over 18 on that. So that's interesting to look at. So that was Mogu and a little bit of TME on that one. The other chart request I had through direct message was Bank of America, and let's see, BAC is can you make break out of the acronym? Break out class? I don't know. Anyway, looks interesting. You've got on the hourly, you've got RSI divergence here, which is kind of bearish. Had a huge breakout, right? So my guess is some sort of wave 3. This could have been like 1, 2, 3. So look for like a wave 4 correction, maybe back to this 27 level, and see how it holds, right? But it's totally outside the pitchfork now, so it could have some more run on that. Bank of America is a good one to do verticals on because the options are really annoying just on the singles. It's heading up into some resistance here on the 30 level, and again, same here on the cloud, right? 30 level. That's double resistance on the hourly and the daily at 30. So watch out for that area there. And the weekly and the daily, and your monthly, big green so far. Just have to see which way it goes, right? But huge channel on the monthly right here. So definitely interesting to watch. Hard to see any major count going on. Possibly 1, A, B, C, 2. This could have been 3, but this can't be 4, right? Because it's already crossing over here. So maybe A, B, C. Tough to say. Just watch this 30 level, and watch your upper Bollinger Band too. So right now it's over the upper Bollinger Band on the daily and heading into resistance. You'd think it would correct a little bit here. So maybe possibly back to like 27. So that's that one. All right, what else we got going on? Chat room. Daniel C., what's going on, my friend? Prayer Kid, how are you? It's fine. It's fine, man. That's funny. Jeff, what's going on, man? Does your account have to be on margin to trade spreads? Yes, it does, and that's why I mentioned it earlier. The reason is because if you get exercised on your naked call or put. So yeah, unfortunately, but next challenge after we get the $50,000 on this one, we'll switch over to advanced trading. Merritt, what's going on, my friend? Kyle, how are you? AC, what's going on? Shirley, how are you? Bargav, okay, so which platform do you suggest to offer great option trading for a small account? I do have Tasty Trade, but Tasty Trade have now limited day trade, just like Red Hat. Yeah, I mean, that's the reason these guys have limited day trades, right? Because it's like Security Exchange Commission, like law, right? So that's the problem. I don't think there is one that allows unlimited day trades for small accounts, just because of like the pattern day trade law. I mean, it's freaking SEC, not much you can do. But I heard another one was at Jellyfin. You can do a bunch of trades with that one too, but I think you still have the day trade. But I guess if you have like 5 accounts, 5 small accounts, you can trade in all of them. I think really the goal is lots of discipline, right? And it's good actually to have that pattern day trade. And I've talked to a buddy of mine too about it. It's good to have that that pattern day trade rule, right? Because it keeps you from over trading, right? That's one of the biggest destroyers of accounts is over trading, right? And so by having this, don't feel like you're leaving money on the table by not being able to trade. Right? That's the hardest thing to realize, right? Because you have a lot of money in an account and like all you want to do is trade, but it turns out commissions could eat you up unless you got free commissions, right? But at the same time, it's like you're taking all these trades, but a lot of times it's like why, right? If you're making like more than 10 trades a day, chances are that there's some issues with planning, right? And we've all done it, we expect the more trades we make, the more money we make, but the reality is, the more we plan, right, and the more patient we are, the more money we can make. And that's the key. And honestly, having that pattern day trade rule is really helpful. And I'm actually glad I have it on the Robinhood account for the challenge, because it just shows that, hey, I've got to find the best setups for this to make it work, right? I can't just be like, oh, let me try this. No, let me look for the best, right? And if I have to wait 5 days to make another trade after making $1,000, which in my case is 200% of the account, doubling the account, right? Then I can wait that, right, until the next one. So that's my thoughts on that. Kyle, what's going on? Could you go over your thought process on how you decide when to sell an option rather than to stay in it? I'm having trouble with being too impatient. Yeah, Kyle, there's a lot of different schools of thought to that. For me personally, I like to as soon as I'm profitable, I like to move my stop up. You can't do a Robinhood because it doesn't have stops, but you can visualize it, right? And it's hard to get out. I understand that. But with like say like Thinkorswim, right, you can move your stops up progressively. So once you get profitable on a breakout, just move your stop to profit and forget about it, right? So, and then if you catch a runner, great. You caught the runner and you rocked. Just keep moving your stops by candles, right? You saw how I did NVIDIA the other day off the 5-minute candles. Because I know how NVIDIA trades. I know it can squeeze and then, it can pull back. It likes to pull back to like it's 8-minute moving average and all that stuff, right? So where do we get this? We got this here in the morning at some point. Like here, like it broke out 155, and I could have had it earlier. I was just busy, but it was still going, right, and it got through that volumetric level, right. So here, once it was going, I was moving stops up, bar by bar, and you guys can trace it on my Twitter feed by bar, right, by bar, and then it got over 57, and finally I got stopped like somewhere around here, So that was a good trade, right? And so you could do that. You could just go when something's running. Just go on a smaller time frame. Just go bar by bar by bar. If it's a bigger time frame too, you could do it, right? Bar by bar by bar, right? 30-minute time frame. You could do it on the hourlies too. Sorry about all this gibberish here, this nonsense. But you go bar by bar by bar there too, right? So, but yeah, definitely on the 30s or on the 15 orbs too. Like if you're doing an orb, bar by bar by bar by bar by bar, right? So that's the easiest way to do it. But yeah, don't be afraid to just if you take profit, it's better than taking a loss, right? Because that could happen too. It could pull back on you. Leon Nation, what's up? Jeff, what's going on, man? Do you ever do credit spreads? Yeah, if you're talking about like selling a spread, you could do it. I don't do it. You could though, like if the IV is really high, it's a good way to profit off of some premium. But it's basically just betting the reverse, just trading for the reverse on it. So for me, no need to do it, right? Just go long, make it simple. So you can go long puts too, right? So if you're shorting, just do the puts instead. Hey, what's up, Justin? How's it going, man? Hey, it's okay. Glad you made it. So, gosh, I don't feel like completely exhausted, right? So I've got other stuff I got to go swimming, and well, today it's a little too cold to go swimming, but I just kind of want to get in this habit of doing this, so I'm not just completely exhausted at night, right? So, Modern Picasso, what's going on, man? Great stuff, man. Rookie Trader, can you please explain strangles and spreads? Yeah, so we went over spreads tonight. So strangles, I can do another lesson on that, in the future. But basically, a strangle is the difference between a strangle, right, and a straddle is like you're going over, you're guessing that it's going to get beyond, a certain price range, right? So a straddle is going to be right over your same price range. A strangle is going to go off like like one strike to the next, right? So so here, if I bought a strangle on NVIDIA, right? So this has got the 155s, right? So you buy each one. You buy the 155 calls, but instead of buying the 155 puts, which is a straddle, your strangle goes basically both of these are essentially in the money, like for each of them, right? And so if you analyze this to show you what it looks like, let me take off that. Okay. So you just have a bigger window, right, that it has to get out of. But you have a potential higher basically profit. So you're really saying that it's going to get out of a certain range, for sure. For me, I prefer doing a strangle. A straddle, just because it's going to go one way or another. The only problem is the premiums are usually higher, right? So you just have to be careful of that. So you have to know that it's going to move a certain. You have to really think that it's going to move a certain amount. And typically, you do that if you're like, okay, I'm at a wave 5 top here, right? And I don't know if it's going to extend like Netflix did, like Netflix. Like a good straddle position would have been when we got back to that triangle. Let me go back to the daily on that. So remember this triangle, right? This wave 4 triangle back down to wave 5. We were coming up, right? I was analyzing this and I was like, okay, we're done, right? We're pivoting here at the median line, right? We're going back down, right? Right here at this. I was thinking like, okay, 4, 5, A, B, C is what I was thinking, right? So this would have been the ideal spot for a straddle, right? Because I thought we were going back down to like 231. And so that was 50-point move. That would have been a 50-point move right there. But it turns out we went up, not 50 points, but 72, almost 100 points, right? So either way, in that case, we would have won, right? We would have won on the straddle there because you'd had the calls and the puts, right? Your puts would have been worthless up here, right? But your calls would have been maxed out. And you have to get over... You have to calculate what your prices were, so it was enough probably pre-earnings where you've been okay, right? And some of the IV probably went up too there. So right, let's just say it was $30 to buy a straddle here, right? Well, you would have made 70, right? Because you would have covered your cost. You moved $100 up, right? So you'd have made that difference on there. So what you could have done here is sold your calls. Your puts already would have been worthless, and now you could have just been holding the expiration on the puts. And then if this thing ends up puking now, right, you might be able to squeeze a little bit more money out of it. So that's the value of doing the straddle. We'll do a lesson on that too in the future. Rookie Trader. Okay, let's check out some stuff. W-Day. Yeah, man. Looking good. I know we looked at this recently. So we had what looked like a triangle pattern here, and it could have been, and then that gave you a wave 5, right? So this could have been 1, 2, 3, triangle 4, 5, truncated 5, right? So now A, possible B here, and then maybe C down. So just watch out for that. But in general, all in all, very bullish, right? This is a very bullish. Let me remove this pitchfork right here. This is a very bullish stock. Remove all drawings. No, just remove this drawing. How about that? There. Okay. Very bullish, right? You just look at it. It's just uptrending, right? So in this case, we're looking at, all right, had a little trouble hitting the bottom of that picture there, but came all the way to the top. Now it's at the middle. It looks like it could push higher, right? Just always be careful buying all-time highs, right? Because you don't know if there's any sellers up there, right? But if it does get through it, it looks like it could get over 180. But if you want to be safe on it, look at doing a if you've got the account to do it, if you think you can get there by February, you can get over 180. It doesn't even have, but I guess you could do this and this. Yeah, you could almost double up on that, make an extra 100 on it. But you could do a vertical on that too to say, hey, I think it's gonna get over 80 by February 15th, right? So that's one way to do it. SMH, let's take a look. Very interesting. Nice run up, obviously. AB, extended C maybe. And then now, what's it doing, right? So it's like kind of coming down. You've got this volumetric level right here that it's staying under, right? It was former resistance is now becoming support. So really watch this 95, 95.50 kind of level. See if it can hold that. If not, it's probably going to go down. So, but it have to power through it. Have to get over 100 to look bullish, right? So that's interesting. Nvidia, I think we just kind of looked at that, but let's take another look here. Yeah, Nvidia is interesting. So, I closed my position. Of all the FANGs, this one is looking the most bullish right now because it's just starting, right? So we had like 1, 2, 3, 4, 5, and it looks like it's starting like a zigzag correction right here. So 1, 2, 3, 4. It looks like it could push this 170 level, which is like kind of the top here, and then maybe even start to fill that gap. And then depending on what, then it might correct, right? And then might push up here to fill this gap at like 188. So this is definitely still on the watch list for the for the game plan too. So definitely like that. So yeah, of course, Ricky Jerry, my pleasure. Jeff, what's going on? You got a small account Tasty Trade, cash, and don't have a PDT rule. That's weird, guys. I really don't know. I don't know how these companies are circumventing the rules, right? So. Anyway, not sure. Joe, what's going on, man? Surely I don't see any chart requests. Hope everything's okay. Yeah, Joe. JP. I assume you mean Johnson & Johnson, right? So J&J. Is JP a stock? Sorry. I don't know if you wanted this one. Probably not. But yeah, it looks pretty weak. So, but J&J. So J&J, I'm not going to give any indication going into earnings, right? I mean, personally, hopefully they fail, right? Because they're horrible people, horrible company, poisoning babies. So in general, yeah, hoping it tanks. But just looking at technically, taking all emotion out of it, it's hanging right here, right around this median line, right? And so it could be working on a correction. This could have been like a 1, A might give you a B. So after earnings, give you a B, and then might correct up C back to the median line, then back down. It's hard to say, but this is definitely going to be on the 15 orb list for tomorrow because I believe earnings are coming out right in the morning. So we definitely need to watch that one. That's pretty much all I can say on that, just because of earnings coming out. So Zig, what's going on? And take your game plan on 15 orbs or 50 anchors inside on SPX. Yeah, how did that work out? Nowadays it moves 20 points daily. Yeah, I mean some people do it right with that. So it's something we'll look at a little bit further. It's just the spreads are so much for the challenge. It's really tough, for this level right now. But once we get a bigger account, like we can use a portion of the account to use on SPX. So yeah, Netfree. Yeah, what's going on, Netfree, man? Great stuff. Yeah, they're reporting tomorrow. So Shirley, what's going on? I'm gonna grab 5 of these, and then I'll get going about 5 minutes, right? So I'm gonna definitely try to cut off a little bit before 8 o'clock, so we can go swimming and all that stuff. So BKNG. The former price line, right? Still doing its thing. Looking good, really, honestly. Got a whole month to earnings. Yeah, this is a good one. If you like a pre-earnings run, this one could do it, especially if it gets over this 1770 level. It could run before earnings. So that's some good possibility on that one. So it's a nice level. Watch for a pivot reversal down, but if it breaks through this 1770, 1780, right, you can see a run all the way up to 19, maybe halfway point, 1850 before earnings, and then we'll see what it gives you at earnings, right? So that's interesting. What else you got? AGN. Let's AGN. Only because it's a popular one here. Have I not pitchforked this one yet? Golly, this thing can move though. 340 all the way down here. So you can see here, right? It's kind of tested the top, tested the middle, kind of tested back up here, coming into earnings this next week. So basically, just watch and see how it handles the top of this pitchfork area. I think I've got an old alert there for some reason, but 165. See if it pivots there. If it does, might come back down. The earnings might be the impetus to take it down further. Hard to say, or it could break through. through earnings and get you back up to 240, right? So it could be an interesting one. But yeah, key levels are this 197, right, on a breakout of the pitchfork, or a pivot. Look to see if it comes back down to 127. So lots of range on this one. Very interesting. Next, let's see. Let's find another one. I'm gonna do OZK. Give us a finance, right? So I got you a fin, right? We got an expensive one, right? That one. So let's see how this is looking. So this is one that you had on your radar a while ago, Shirley. This hopefully you took advantage of this huge breakout. Earnings obviously did good, but remember it was coming down the pitchfork here, right? Broke out, gave you an earnings run, right? Up to 118, and then total retracement is 23.6. You could have got out here, and then boom, took you right up to 38.2% retrace, and it's halfway through a prior gap. So right now it's a little island in itself, right? It's showing oversold kind of conditions, but doesn't mean it can't retest that 34 level before coming back down, right? So it looks good. And what else? LOGM. We'll do LOGN and one of these other ones. LOGM is an interesting one. Log me in, right? I've lost money on this one before because the spreads got crazy. Yeah, look at that. Island, what is that? Island bottom or something like that. So there. I mean, it's trying, right? It filled this gap, I believe. No, did it not? Golly, isn't that crazy? So this whole chunk right up here is an island. So yeah, because that was, I don't know, 73.49, low 74.87. So not quite on that one. Yeah, 74. So never quite filled that gap. So watch out. It's coming into this prior resistance right here is now becoming support. I'm sorry, this prior support is now becoming resistance. So be careful on this 92 level. If it can't break through that, it might retest back here at 83. And if it retests that, it might want to fill that gap, right? But if it doesn't, if it breaks through this 92 level and then gets through 94, I think you got a really good chance of it filling the gap up here, probably by earnings, right? To get to that 104 level. And then one more. We'll look at, let's just do the WLFC. WLFC. Interesting. Very interesting. Very bullish in general, right? I mean, it's really just kind of following this huge trend up. Nice top right here, nice V, kind of temporary V bottom just to retest these prior support levels. It tested it, liked it. Just got over this pivot right here. Might pull back a little bit to the median line at 37, and then might retest those highs at 39 and hopefully break 40 for you on that also before earnings. So that's those. Modern Picasso, what's going on? I want to get your general approach for a stock that starts off as a corrective wave, and best way to count it, for example. So TRST or TSX. Let's look at TRST. Like basically you're saying like how to deal with the corrective wave, like right here. So basically what you're saying is like this wave is done, right? Because you hit a high, and what do you do now? A, B, C, or whatever the case is. Really tough to say, right? Because the best things that we want to trade, right, when you're doing Elliott wave, right? We've talked about it a few times. Is you want to jump on a wave 3, you want to jump on a wave 5, and you want to jump on a wave C. So that's the best way to do it, right? So if you can figure out what type of corrective wave you're in, right, then you can try to find your wave C, right? Or just wait till it's done and just keep that stock on your radar for a while until it starts putting in your like a wave 1, right? So and here this type of push up here, it's really hard to say with this. I mean, this looks like this is funky, right? So if it were me, I would say probably like A, B, 1, 2, 3, 4, 5, right? Something like that. So this could be like a flat correction right here. So that could be done. If you were here, it's hard to say too, but because the count's really funky. But A, B, it's easy to see after the fact. But then maybe work for your C down. Your target might have been here at 8.32, but it kept going, right? And so now it's clearly reversed, right? This is a very sharp reversal. So it's either working on a zigzag of some sort, right? If it is, right, you'll look for a reversal and then another zigzag up, right? Just like we were doing with McDonald's, right? We're trying to trade the correction on that. So McDonald's is still doing its thing, but now we got earnings coming up, so it's getting all screwy. But if we go here, this is the exact thing, right? We knew we were basically wave 5 top here, zigzag down. So that was the first part of the correction was identified, right? I actually traded this. This is before we did the $50,000 challenge, but I knew after filling the gap it would get some nice support there, and then I figured that would be it. Continuation pattern. It's like, is this just like one and some sort of A, B, C, 2, and now it's gonna like come up here and try to, if it can't pass this, right, to be a full corrective pattern, right? Wave C on a zigzag is never gonna do that. So as long as it stays below 190, it's gonna give us a shorting opportunity. And I wonder if it'll come all the way up here and then just kind of dump at the at earnings. So if earnings are really bad and you get a big move down, look for a corrective wave up because it's gonna zigzag. So it might mirror this one. So down, puke, up, right, corrective, short covering, and then down, right? So that'd probably be the next attempt at doing McDonald's short there. So that's kind of how I'd look at it. But yeah, well, that TRST was one on the TSX. Sorry, my friend. Yeah, so TRST. But either one, that was a corrective pattern too. Let's see if I can pull it up on here. Yeah, I can't pull it up on here. But shoot me something on Twitter later, and I'll post it too. So see what I can find. When the first IPO and it already drops into a corrective move. I think Roku did that, didn't it? Initially. Let's go back at Roku and see what it did. And then I gotta get going, guys. 8 o'clock. This is a trial session, right? So Roku kind of did the same thing, right? It kind of dropped. It went up initially, but then dropped, right? So it started with a corrective pattern, like you said, but you could look at it here as it was 1, and this was your corrective pattern, A, B, C, 2, and then 3, right? That's the first wave 3, and then then this funky. Did it ever go back below here? Well, if that were a wave 1, it's tough because that was not really a wave 4 if it crossed over it, right? So it was this huge corrective phase. And this is where Elliott wave gets a little funky, right? So so you got to watch out with those. But yeah, TME. Let's see that one. I remember that one puked right at the open. So I think this is what you're talking about here. Yeah, because this thing just started, right? But I guess if you look at it this way, if it starts that way, just look at it as a down move, right? The first one. That's what I did here is I counted this 1, 2, 3, 4, 5. So that was your 5-wave pattern down, and now you're in the corrective phase, right? 1, 2, 1, A, B, C, and then up, right? So yeah, it's maybe not necessarily corrective, but maybe impulsive to the downside. Maybe just on an IPO, it just starts down, right? So you're downtrending, right? Right off the open. Yeah. Okay. Cool. Yeah. Roku. Nice. Anyway, guys, appreciate you. Yeah, TME is another one. Yeah, absolutely. But yeah, appreciate you guys, and I think hopefully this new time works for everybody. And certainly, if you missed it here, you can catch it at 9:30 or whenever is more convenient to you. But at least it's out there for you. So I hope you guys learned something a little tonight about verticals. We went over some game plan ideas, and I'll tweet out all the usual good stuff a little bit later. So have a great night, and I will tweet you tomorrow. Have a great trading day tomorrow. All right, talk to you later. Bye.